interbank quiz is coming up on 22nd May. Go for it without fail because we are bankers and this quiz is for bankers. It will test your general knowledge, it will test your banking current affairs, and it will test your banking awareness knowledge. So go for it without fail. Okay. So participate. Go on Adda 24/7 and participate. Also, now download Adda 24/7 app on your mobile as well as go for just join this officers Adda 24/7. So what is the topic for today? Today's topic is factoring and forfeiting. So that is very important topic. See here, everyone is afraid of factoring and forfeiting because why? We generally don't do it in the banks. Okay, only few banks do this factoring and forfeiting business, and that also through subsidiaries. Banks are not allowed to do it by themselves. It is always done by subsidiaries. Okay, like SBI factors, Can Bank factors. There are separate. It's a separate factoring company. Okay. So let's move on. So the schedule for today is what? Factoring, then factoring process, then forfeiting and objective questions. So let's start one by one. Factoring. Factoring is defined as a continuing agreement between the financial institution and the business concern selling goods or services to track customers on open account basis, whereby the factor purchases the client's book debts either with or without recourse to the client and in relation thereto controls the credit extended to the customers and administers the sales ledger. It's a big sentence and factoring definition is a huge one, but I'll give you in short term very simple logic. Okay, factoring means what? It does a simple business. Simple business is that of the financing only. Okay, what does it do? See here, let's say this is bank. Not bank, we won't use the word bank over here because factoring is not done by actually banking, it's done by a subsidiary. Suppose see this, A is selling to B. Okay, A is selling to B. Now he is selling it on an open account basis. Now what is open account basis? Open account is here. There are four types of payment systems or this business types. One is advance payment, in which what? Before selling, A takes the advance from B. Quite simple. Second is open account basis. Open account means what? This A sells to B without any proof or without anything. He just sells it to the B, and then B accepts that bill of exchange. See here, always in any trade there is always a bill of exchange. Okay, B accepts the bill of exchange and gives it back. Now is there any bank involved over here? No, bank is involved only for payment. Only for payment. So I'll show you over here. This is payment, means goods go from A to B, goods go from year to year, and year payment goes from B to A, and this payment passes through some bank. Okay, so bank comes only for payment logic. The goods, the transfer of goods is not at all in any relation to or does not have any relation to any bank. Okay, that is open account basis. Third one is collections. In collections, A send the goods through his. Many of you might be knowing in trade finance we have already covered these topics. Okay, so A sends the goods directly to B, then the documents are sent through his bank to the B's bank, and then B's bank gives it to B, and after collecting the payment, that is third is collection, and fourth is LC. Right? See here, I have a separate lecture on this. That's why what happens, it'll be a wastage of time if I show you everything over here. Okay, so open account means basically, because this open account came over here, that's why I'm explaining all these four parts. Okay, so open account means basically A to B directly selling, no bank is involved, bank is only involved in payment system. Okay, so firstly understand a few words over here. Open account basis, okay, and selling goods or services to track the customers over here before this, right? Then yeah, this goods or services over here. Factor purchases, this is very important, purchases the client's book debts with or without recourse. What is this word with or without recourse? With or without means here, without, suppose if I pay anyone without recourse, it means even if I am at a loss, I can't recover the funds from that person. That is without recourse. And with recourse means if I am at a loss, I can recover the funds from that customer or from that client. Okay, so that is basic difference over here. Now understand the factoring business over here. See this, how does the factoring work? This is an exporter, this is an importer. Okay, exporter is selling it to the importer, right? He has sold it. This is step number 1. See this, exporter has sold it to the importer. Now what happens, it is on open account basis, means what, the goods are directly sold to from exporter to importer, and the documents are also given directly to the importer through courier. No bank is involved, whereas in collections bank is involved. Okay, so documents are given. What happens, original documents means invoice and everything is given directly to the importer. Now this exporter has the copies of those documents. Now he goes to step number 2. He provides the copies of these documents to the export factor. We'll call this bank, but it's generally a subsidiary of the bank. Okay, so these copies of invoices and other documents are submitted to export factor. What does export factor do? Export factor purchases, remember this word, purchases these invoices. Okay, now once he purchases and pays and does the prepayment, something 75 to 80% generally. Okay, so the prepayment is done, purchase is done. Now the headache of recovering this money lies on this export factor, because this guy has already got the money, isn't it? Only 20% is remaining, that he'll get it later, but major chunk of the amount is received. So what does that export factor do now? Now he follows up with this importer. How does he follow up? Does here generally what happens, exporter is in India and importer is in USA. Can a company in India follow up regularly with this guy importer? No. What happens? He appoints an import factor over here in USA. Okay, it's his agent only. So this import factor now follows up with this importer. So once these book debts are purchased, okay, this copy, then he goes to step number 3, prepayment, and then step number 4, he forwards this copy, whatever is received, to his import partner over there, import factor partner. Okay, this person, import factor, he checks the copy of invoices along with his purchase ledger. Here this guy has purchased, so his purchase ledger will be checked along with the documents which this person has received. Okay, and if it's telling it's a regular business, it means. So what happens now, on the due date, let's say due date means roughly 60 days or 90 days. On the due date, this importer will make the payment, right? Full payment he will make. Suppose if the transaction is of 100 rupees, okay, this person will be giving 80 rupees to this import factor will be giving 80 rupees to this guy. Okay, now he is still to receive 20 rupees. Okay, so what happens, this importer will pay full 100 rupees. Now what will, this is step number 6. What will this import factor do? Now he has received 100 rupees. He'll deduct his commission and pay the remaining amount to this export factor. Means roughly from 100 he'll give something 94 or 95 rupees. Okay, 5 rupees is his commission. So now this bank has received, or this factor has received 95 rupees, and this person had received 80 rupees only. So what this guy will do, he'll deduct all his interest and charges which were charged to this exporter, and then if something remains, then he'll give it to the, see this, balance payment to the exporter, means after adjusting his loan. Okay, so first he'll take his 80 rupees, then charges, then interest, and if then anything remains, he'll pay back to the exporter. That is how the factoring business works. Always remember, factoring business is a relationship business. Means if I sanction the limit to any person, factoring limit to any customer, it doesn't mean I'll sanction or allow this to all his customers. Means here, this is bank X, this is customer A. He is having a relationship with two guys, B and C. Okay, B, he is having the sales relationship for 10 years. Okay, and C, he is having it for last 1 month. Okay, recently he has started selling to this C. Now this bank X will say, if it has to give the factoring limits, this bank X will say, we will finance only your relationship with A to B. We won't finance this relationship with A to C. Okay, so that's why I said factoring is a relationship business. Okay, now let's move on. What are the services in factoring? Debt administration means, what is debt administration here? This sales ledger, this sales invoices are purchased by this person, right? So once it is purchased, it becomes a headache of this export factor. Now this exporter is freed, right? He has received 80% of that money. So debt administration, this administration or tracking of all the debts is done by this import factor. Credit protection. Credit protection is generally applicable for non-recourse financing. Okay, so credit protection means as professionals, blah blah, this everything you can read it. Factors will have a facility to offer credit intelligence. Always remember one important part. This exporter is individual person. This factor is generally the subsidiary of a bank. So this bank is a bigger unit than this exporter. This bank will have definitely the higher level of contacts in this country, right? So what it can do, it can definitely check how the importer is doing. Earlier he was good, but now is this business doing good? So it can accordingly suggest the exporter that please don't do business with this importer now, because he is on the verge of bankruptcy. His country is on the verge of bankruptcy. Something, all that sort of risks, this this export factor can definitely guide it. Okay. Then factor financing. Factor financing means this 75 to 80% part. Okay. Whatever is the invoice amount, immediately 80% is done. See here, it's not done in all the countries. Understand this point. But in India, factoring business is for 75 to 80% this advance amount. Okay. Pre-shipment finance or post-shipment you can call it. Okay. Similar to that. In USA and other things, there are factors who don't provide the financing. They only provide the remaining two services, this credit protection and debt administration. But in India, you know, if I don't finance, customer will run away, isn't it? Okay, next. Now we come to forfeiting. Forfeiting is similar to factoring. Remember, the functioning is similar as that of the factoring. Only the difference is what? Here, we'll read this. Another product for financing of export receivables is forfeiting. It can be defined as a mechanism of financing by discounting the export receivables. See this. Discounting the export receivables without recourse. Now understand this, without recourse, okay? Means, I'll tell you one logic behind this without recourse. See this. From this example, I'll explain you what is with and without recourse, because many of you might not have got when I told you first. A has, let's say A has given the goods to B, right? Done. Now B will give funds to A. Now this X bank has done a factoring business, let's say. Now factoring can be with or without recourse. Means what? This X will give 80% to this guy immediately, right? Now the headache of getting the money from B lies on whom? Lies on X. Now if B doesn't pay to X, let's say B doesn't pay to X, okay, then now who is at loss? X. Whom should the funds be recovered from? From A. So now comes the question of with and without recourse. If X has an agreement with A such that let anything happen to us, let anything happen whether B pays or not, I will not recover the funds from you, I won't trouble you. That is without recourse. If X is having the agreement with A such that if B doesn't pay me, I will come to you for funds, isn't it? Then it's with recourse. Okay. So got this point, with and without recourse. Who will take the loss ultimately? Okay. Next. So forfeiting. So without recourse to the exporter seller for medium term on a fixed rate. Then say this, on a fixed rate, medium term on a fixed rate. For the full value, remember this is second part, full value. So this is the difference between factoring and forfeiting. Factoring is with or without recourse. Forfeiting is compulsorily without recourse. Okay. Second, factoring is 80%. Forfeiting is full value. Okay. So now this is clear to you. Forfeiting. Now I'll directly go to the differences. Factoring and forfeiting. Factoring is for short-term business. Means generally 90 days. Okay. Forfeiting is a long-term business, means generally it's a turnkey projects. Okay. Without recourse, factoring, forfeiting is compulsorily without recourse. Factoring is for commercial transactions. Commercial means what? Short-term transactions. Okay. Under the LC transaction, similar to that. Okay. 90 days, 60 days, that's it. These forfeiting is for turnkey projects, right? For factoring is 75 to 80% finance. Forfeiting is full value finance. Okay. Invoice means basically it's an invoice financing in factoring, and here it's bill of exchange financing. Okay. So that's the only difference. Remaining logic, the way of working is same as that of factoring and forfeiting. Working process is same. Okay. So before moving ahead, I'll again tell you, remember we are having this selection batch which is coming up on June 6th, okay, 6 a.m. So remember this, June 6th, 6 a.m. join this batch. Why? Because we'll be covering all the numericals, all the case studies, all the important concepts, okay, all the objective questions required for passing CAIIB. Now it's a last minute revision. Within 13, 14, 15 days you are getting all the knowledge, okay. So why not to go for it? And 2 hours a day in the morning. So all 35 plus hours of ABM, BFM, mocks and ebooks, last minute preparation, recorded videos 24/7, unlimited doubts, then CIB June July exam, okay. Target is that. So how to go about it, how to get the code, and what is this code Y432? It is a discount code. How to use this code, I'll show you at the end, okay. So let's go to the objective questions now, because that was what did I give in the schedule: factoring, forfeiting, and then objectives, right? So what is the maximum debt period permitted under factoring? I'll give you 5 seconds, okay. Tick tick 1, tick tick 2, tick tick 3, tick tick 4, tick tick 5. What is the maximum debt period permitted under factoring? Anyone? Yes, many of you have typed 120 days. No, it's 150 days, okay. Answer is 150 days, okay. Because this question was new to you, I know, because we don't handle factoring generally in banking business, okay. Very few banks handle it. What is the maximum grace period? Now understand this word, grace period is different. And what was the earlier question? Debt period, okay. Grace means what? Other than 150, additional period if there is some problem, okay. If there is some problem, this grace period is not provided every time. It's in the specific case only, after due permissions. So what is the maximum grace period allowed over here? 150, 120, 90 and 60. Type 1, 2, 3 or 4. Don't guess. Check on Google. Why not? Check on Google, man. Everyone, because you have to type the answer. Yes. Now, yes, Google Guru. Yes, everyone is typing. Answer is correct. 60 days. Okay. Next. Which out of the following is not the service provided by factor in factoring? Means which is the service not provided? 3 services we had seen that, right? Which one was that? Debt collection, then this credit protection, and third one was this is sales ledger. So check this: management of receivables means basically debt. Production of goods, not the part of those functions. Collection of debt, it is a part of. Maintaining the sales ledger, yes, it was a part, because it's everything is related to debt over here. 1, 3 and 4. So what is the answer? Obviously production of goods, right? So answer is 2. Tell me one simple logic. Can any bank, any financial institution help a company in producing the goods? No, that production of goods has to be done by that company itself. Nobody will come to help you. Everyone can help you in finances, okay. The type of factoring in which the factor recovers the amount advanced to the client in case of non-payment from the customer, means where there is a privilege or there is a room for recovery from the customer, right? That's what just now we saw that example X. A is the seller, B is the buyer, right? B is the buyer over here. So A sells to B goods and B has to pay. So B has to pay means if factoring comes in, B will pay to X bank. But if he does not pay, then what? If it's with recourse financing, X will recover it from this A, right? If it's with recourse financing. So what is the answer over here? Non-recourse or recourse, 2 or 3. He can recover, okay? That is the condition given. Okay, so answer is correct. Answer is 3, recourse, isn't it? That is the meaning. Means in case recovery of funds, that is allowed in recourse always, okay. The factor generally makes the payment of -% of invoice value after acceptance of bill of exchange. So in factoring, what is the amount financed? 40, 50, 60, 80. Yes, everyone. Now it's very easy. If you can't answer then you are not attentive in the class, okay. So tell me the answer. Yes, correct. Answer is simple, right? Everyone knows this. 80. Yeah, 4. How many factors are there in international trade? Just now we saw it. How many factors are there? A is the seller. Okay, let's show you over here only. Or shall I show you in that example? One sec. Let's see. See, where was it? this. Yeah. Wow, what was this? See this. One was this export factor, this part, and second one was this import factor. So how many factors are there? Two factors. Why there are no three factors? Because cost is involved. If see here, this guy has deducted his commission. If there's one more factor, that guy will also deduct his commission. So commission gone. What will remain to this export factor? Nothing. Okay. So that's why always they try to maintain as minimum factors as possible. So answer is 2. Okay. One on the exporter side, second on the importer side. Next, in forfeiting, the forfeiter makes the payment for dash percent of export value. Forfeiting, just now I told you, answer is given over here, right? 100%, because we have already discussed 3 to 4 times in this lecture itself, right? Okay, move on. Go on. Everyone clear with this? Type yes if you are understanding this. Type yes fast. Type yes. Now I am getting the answers. Type yes. Everyone has to type yes if you are understanding. If you are not understanding, type no. Not an issue. Okay. You can again revisit this lecture. Okay. Credit protection is available in which type of financing? With recourse, without recourse, or none of the above. Just now I told you while explaining what forfeiting as well as this factoring also. Okay. The 3 conditions. Credit protection was one of the services given. So it's always available in without recourse, right? Why without recourse? Credit protection is there. Credit means what? Means what? See here, this X bank, let's say this X bank has financed this A seller, right? And A has sold the goods to B. So he has financed means what? He has purchased the debt, right? Now the debt is sold to X. Now whose liability is it to recover the funds from B? X bank, or you can say FI, financial institution, right? So it's his liability to recover the funds from B now. So if it's his recovery, he must definitely look for the protection of himself. If B doesn't pay, then what? So credit protection is always given in form of doing due diligence firstly. Okay, that is a due diligence to be taken. So always anybody who lends will always try to take the due diligence on this. That's why it's without recourse. Okay. The process of selling trade debts of a client to a financial intermediary is called, means selling the trade debts. Okay, that's simple one, isn't it? Factoring, securitization, materialization. There is nothing called as materialization. Okay, so either factoring or securitization. Selling the debts. Just now we are seeing the full topic the same only. Okay, factoring. Okay, what is the securitization? Securitization is very simple. Here, logic is very clear in securitization. X is a bank. Okay, it has standard loans. Let's say it has some tractor loans of 10,000 crores. 10,000 CR. It has a tractor loans, full tractor loans throughout India. It's having it. So what will it do? Its funds are locked over here. What will this bank do in securitization? It will sell this 10,000 crore to a securitization company. Generally, this company is a special purpose vehicle formed under the leadership of this bank only, but it's a separate company. So it will sell this loan to this securitization company. What will this securitization company do? It will convert this 10,000 crore loan into packets of, let's say, 1 lakh each. 1 lakh each. 1 lakh to this guy. See this. 1 lakh to this guy. 1 lakh to this guy. Similarly, all. And it will sell it to separate clients. Okay. So that is the process of securitization actually. Okay. NBFCs perform a great role in for financing wholesale, big scale industries, SMEs. Okay, so we'll call this MSME, small scale. Okay, so NBFCs finance majorly to whom? They finance it to C, right? Small scale or MSME. Okay, so that was the topic of today's discussion: factoring, forfeiting, and objective questions. Again, I'll suggest join this batch. And for joining this batch, what was the code? Y432, right? This code. Okay. So how to use this code? Now I'll show you over here. How to use this code? Go to Adda 24/7. I'll show you how to go over there. See this. One sec. Let me go to the site. Let me see. One sec. Let me go to this side. So there you will see everything. Yeah, calculator. Yeah. One sec, let me see where that site Adda. No, yeah, it's not. I'll open a separate site only. Okay, separate thing. Okay. See this. Okay. Yeah. So see this. We'll go over here on Adda 24/7 and this. One sec. Yeah. 24/7. Yeah, hold on. No. Okay, it's creating some problem, but you can go to Adda. One sec, it has come. Go to Adda 24/7 and on Adda 24/7 you'll see all the details over here. Okay, all the details you'll see. One sec, let me see if it's possible. I'll definitely show you immediately now only. Champion site. Okay, go to Adda 24/7 and then you can definitely join the class over here. Type this code Y432 and yeah, on Y432 type this code and you'll get the discount of 80% over there. Not 80. Presently, whatever the discount, presently it's 77% going on. Okay, so go for it as fast as possible, and I'll see you in the live class as well as tomorrow with another topic. Okay. So friends, now I'll tell you how to use the code Y432 on Adda website and purchase various products. I'll show you one simple example of the batches. See here, go to Adda 24/7. Here you will see on the front page itself, you scroll down, you will get this banking, insurance, JAIIB, CAIIB, SSC. Okay, click on JAIIB, CAIIB. If you are having the app, then it's the best. Then you don't need anything. Okay, you earn extra 1% also using those coupons. So download that app firstly. But if you are on the website, see this, then JAIIB, CAIIB, Mahapack, JAIIB, CAIIB, click on this CAIIB. Once you click on this CAIIB, you'll see all the batches over here. See this. Okay, click on this selection batch. Click on this selection batch, you get this selection batch over here. See this. You'll see all the details which I've already mentioned to you. All this 35 plus hours of ABM, BFM, mocks and ebooks, master revision for CAIIB last minute, then 24/7 recorded videos available, everything. Just now what I told you, you can go through this again. Okay, and the fees is 13,299. You'll say it's too much, so view the offers, click on offers. Okay, apply offers, put the code Y432. Okay, click apply. Once you click apply, see this 13,299 reduced to 3058. Means 3058 is nothing as compared to the increments which you get. You get 2 increments, right? So 2 increments, in how many months will you recover? 13 is the 39. Roughly 1300 is your increment. So within 3 months you will recover everything. Even if you are at officer grade, you will receive a single increment, roughly 1200 to 1300. Okay. So that can be recovered at any time. So go for it as fast as possible. Okay. So I'll see you in the live class as well as tomorrow with another topic. Okay.